Okay, so we're going to do a quick trade review that was requested on Twitter, and this trade was taken on Wednesday, the 31st of January. So first off, what I was talking about was concerning an impulse range. And an impulse range is this range right here. I'll typically go to an hourly chart or a 15-minute chart, even sometimes down to a 5-minute chart, and I'll look for these types of ranges, right? And we could highlight that. So something like that, right, where we see an explosive movement up with lots of displacement, leaving gaps in the market. So in the market, well, first off, what we would be looking for is, for me to not define an impulse range, but define if there's a trade within an impulse range. What I like to do is I like to measure from the swing low to the very first swing high. And I'm not using this swing high because to me, I mean, we consolidated for a while, just took another stab up. I like to look at this range as the inefficient range. This part of the range is kind of delivered efficiently as we have lots of up and down movement. So what I'll do is first I'll place a fib, right? And I'll measure out the equilibrium point. And so if you notice, we never come and reach equilibrium here. So to me, this level specifically and below it is something that I would look for to target for some sort of bounce or a quick scalp around these levels. And then what you can do is you can dive lower time frame wise and try to refine, fair value gaps or order blocks or what have you. So it was Wednesday. This was an FOMC day as well. And real quick, you can see how, look how sensitive we are, price begins to kind of bounce around the midpoint as soon as we hit it here, and this range is actually the range that I traded. So let's dive down into a lower time frame just to show first off the example of that. So this is London session, or the end of London at least. You have a little bit of a 2022 model here. Sweeps the low, again below the equilibrium of that impulse range. And you have some movement, so this is just to show some sensitivity. But to drill into the actual trade, what we're going to do is we're going to move to a 15-minute chart. And so what I do here is, like taking the knowledge, right, that we've already traded below the equilibrium point in London, and now we're digging deeper into it. I'm now looking for, what is it reaching for on the next highest time frame? So instead of an hour, I drop down to the 15-minute chart. So we have a couple of imbalances here, right? We have this one here, which I believe was traded into. We can just do a quick check. Yep. So that was the London close, sort of. That's what that was trading into. So we kind of discount that one. I'm not really looking at that. There's this one here. Have we traded into that? Yep. That was that sweep down before that first move, before New York opened in the 8:30 news. So now what's left, if we're digging deeper, right, into the range, we have this 15-minute fair value gap. That also has a propulsion block, right? Order block on top of order block, propulsion block. So this becomes a strong sort of area where I'd be looking for a bounce in price in order to scalp, right? So this, at the present moment, we're just, qualifying a PD array for a potential move in the market. So what I'll also do is, as we're getting deeper into this range, I'll change, and now at this point, the 50% level it's meaningful, right? But it's not what we're reaching for. So now what I'll do is I'll throw on OTE, and I look, and as another layer of confluence, this 15-minute gap sits right at the 70.5% retracement level, which is kind of the sweet spot that I think OTE is best used for. 79 is great, but I typically will look to enter around this area. So now that and none of this exists, right? Like none of this is here yet. We're, say we're somewhere over here and we're waiting for price to come down. But before that, we're just we're adding confluence. We're nesting PD arrays, all that good stuff to look for a potential sensitivity point or a point of interest. So now that those things have lined up, let's go to all of our other markets and check out what was going on while we're trading towards this point here on the chart. So as we're coming down, you can see that the S&P is holding, and what's marked out over here is this is a daily BPR on the continuous contract that we played around with. I just haven't really touched it. You can see we've been consolidating around it. Body's respecting it, so I kept it on the chart. But more importantly, we have SMT at this point. Right, so there's SMT there, not taking this low. And then also on a higher time frame, we have the SMT to that same swing point, which NASDAQ has already drilled down into. And then we also have these equal lows over here, so that helps with bias that you're probably not going to hold on to this trade for very long, but that's a whole nother video. And then we have the Dow also just way up at highs, right? Strong divergence. So S&P, the Dow, showing strength comparative to the NASDAQ, which is just clearly reaching to rebalance, right, this whole entire range. So that's something that you'd like to see if you were looking at an impulse range in terms of intermarket, relations. What's the S&P reaching for? Where's that going? Why would the NASDAQ be melting so much in relation to these other indexes? You do have low resistance liquidity here, but you're using SMT to clarify, right, whether your timing is right. So let's dig down into something deeper here. Okay, so we're on the 1 minute chart now, and let's take a look at these lows, right? So this swing low, you could see it also on, I have all of the points anchored, so you could see them popping up on every single chart in terms of, the crosshair. But anyway, if you look, Dow puts in its low here and here, and instead the S&P and the NASDAQ are digging down lower, excuse me. And with all the narrative that we've already built up, why and what the NASDAQ is reaching for, that's what's going to help us kind of start looking for some sort of bullish setup. And I typically don't love using just the Dow for SMT, confluence. I like to see ES or NASDAQ, also diverge from each other. So we have this meltdown into the POI, right? And while that's doing it, Dow is continuously holding these lows from here to here. And you have, that's a rough, trend line, but let's just call it that. So we've created a broad SMT between the Dow and the two indexes. And so for that reason, my first entry, besides, well, I guess I can go over the first chased entry, and that was because of the Dow SMT. And so what we'll do now actually is we'll drill down into a 15-second chart, because that's where I was at. And you'll see that really doesn't look like there's anything here, but on the 15-second chart, I'll go over an entry model that I was going to take. Okay, so we're on the 15-second chart, and I'm going to show you my first failed entry and why I took it. So the reason I took this entry was we already had the Dow continuously climbing higher as the S&P and the NASDAQ are trudging lower. And so what I found was, you can call it a chase entry because I didn't wait for the 15-minute gap, but in my mind, I'm looking for longs because we're deep into this OTE range. We're rebalancing. We're getting close to a 1050-ish sort of time for a macro. So I'm looking for entries, and I'm going to try to, basically get the best entry I can. So what I looked to enter off of, and what worked temporarily but not all the way through, was using this 15-second fair value gap as an inversion gap, entering long here, and then looking for a scalp to the upside, whether that's this high, there was this low resistance trend line, back up to the equilibrium of the range, basically is what I'd be looking for a longer hold of a trade, and what I thought was reasonable. And also what you kind of have to know is when you're trading these impulse ranges that are being revisited, the reaction oftentimes is so very quick off of the equilibrium point, or when it gets to where it's reaching for, I should say, it's going to move so quick that oftentimes if you're on a 1 minute or if you're not placing a limit at a specific level, you're not going to catch a fill. Or the bottom's going to move so fast, and you'll have something like this, right? Imagine this on a 1 minute time frame, and more so it's not even giving you this any sort of jitter, and it's just straight down or straight up, right? And then you'll have to wait for a 5 minute or a 15-minute fair value gap because the move is so explosive. Like, this is the start of that impulsive move. So I took a chance on an entry here, and I end up getting stopped out. So your entry would be, so we close above that inversion, and also I would qualify it as an inversion because I typically don't like the first or the last fair value gap in this case. After taking liquidity, you typically would look for that fair value gap to be some sort of inversion gap. So that's what I do, and you would enter on the retest of it, and then you would have your targeting and your stop. It's pretty subjective, but you could just risk the low. So that was that. It offered about 6 points from top of the fair value gap to the high, but I ended up taking a 9-point stop out below the low. So then it was clear to me that we were reaching for this imbalance. IOFED, pretty much the first 15-second candle that reaches into there, and get a pretty strong reaction in here. So I enter one in here, just off of the narrative. Obviously, there's no real entry model besides just entering in a 15-minute fair value gap. But all the narrative that we've built up so far is why I placed a limit right at the 70.5, because again, of those qualities that old impulse ranges have, where as soon as you reach your level, it's most likely going to take off. So that's why I had a limit here. So immediately we get a strong move to the upside, right? Closing above that down close candle, making that an order block. And if we drag that out, I then add a second contract as we're touching the top end of this wick, because again, oftentimes you won't always get the body retest. And this is kind of another model, the first order block after, it's usually on a 1 minute that I take it, and it's, I call it the first 1 minute order block. But the concept is the same on the 15-second chart. And all while this is happening, we're still in SMT with the Dow. And, ES is not taking that low. ES also gives a strong reaction. I get a strong reaction across all three indexes that made some sort of a sweep of lows, right? And so at this point, I'm confident that I'm on sides. I'm not confident that we're going to go much deeper in, so that's why I'm adding into this position. You can see we respect the order block. We begin to move higher. But as we're printing, I'm noticing that we're leaving a lot of equal lows on the NASDAQ. And what I mean by equal lows is, you have all these bodies, right, that are kind of a little too clean, right? And you have these wicks that are a little too clean. And what you'll also notice is that there's no SMT for these legs, right? There's no SMT that starts this move up besides the longer time frame SMT. What I really like to see is then another SMT form, right? So if let's say NASDAQ just tapped into here and then took off, and ES made one more little micro sweep below, that would be good enough for me. But as this trade's working out and I'm seeing that we're building, we're digging deeper than you'd think you'd have to, right? Um, Instead of stopping somewhat short body-wise of this fair value gap, we're trading below it, right? And quote unquote invalidating it, but still leaving a lot of clean bodies and wicks behind. So my next plan at this point is, I'm most likely trading an unconfirmed bottom. And that's because the lack of SMT to trigger this move. And I would move to a 1-minute chart to show that, but then it would be, you're not going to see too much. The 15-second at this point is enough. So then targeting wise, I mean, look, you could take it off inside this fair value gap. I wouldn't do that because, again, in my mind, I'm looking to pick the bottom. So this is not a likely target. We're likely to go past that. But after all of this print, now my mind is changing, right? And I'm seeing that, this seems like a weak bottom. So instead I say, well, this is the failed inversion. It'll most likely act as resistance again. So I opt to take one off here and another one off in this candle after I see that we've rejected through here. I would have held this contract had we printed through and at least tried to hold this, but you can see and the way this printed, I don't have FX replay, but if anybody does, you'll see that this candle was actually a pretty aggressive up move on a 15-second time frame and then completely gets stuffed back below. Body can't even close within the fair value gap. So that, to me was the exit. And now my theory of, we're going to create some sort of SMT to trigger the real move is kind of in play. So I take off that position and I wait. So now here's where you get your real SMT, your SMT that triggers the move. And then you'll also see what I'm talking about, like when we hit a destination in those impulse ranges where we're going to take off, we just take off, and there's really not much time to hop in. So now you can see NQ respects this low. I should really change that color, but just keep it for what it is. And ES decides to sweep that low. And again, Dow is maintaining strength throughout the whole entire move, so that's another confluence. So let's drag the order block all the way over. And let's measure 50% of that order block. And then you can see it's getting a little messy, but let me just move that. But this is what I was doing real time and how I was gauging, is this SMT going to hold? So we can see very lightly we're pulling below the equilibrium, or excuse me, the mean threshold of this order block. We print one candle, again, you could say it's invalidating, but not to me. I would have another rule where if it prints below, it has to immediately retake the level and then begin to respect it. And that's exactly what you see in these 15-second bars. So that's one factor. And at this point there's no SMT yet. But when we sweep these lows, but hold this low, sweep all the lows, that creates our SMT. And once we printed that candle, and I see us, look how the body of this 15-second candle comes all the way down, digs into the 70.5, digs into the 15-minute fair value gap, and then closes a body perfectly on the opening price of that order block, while also respecting the mean threshold. Next 15-second candle is my entry. So then again, we're respecting, and then we take off. And at this point, I knew I had the bottom here, but I chose, and that's in the Twitter post, I choose to take the profits relatively quick because I was happy enough with the monetary gain, and it was FOMC, NFP week. These could be really messy weeks, so I wasn't willing to sit through anything high resistance. But as you can see, what I was explaining in terms of you're not going to get much of a pullback, that's what I'm talking about. We get a complete explosion off of that level, and now I can switch to the 1 minute and show you what that looks like. But the entry was around, I think it was like 87.25. So as soon I wanted to get as close to the mean threshold of the order block that was holding as possible. So let's move into the 1 minute. Okay, so now that we're on the 1 minute, you can sort of see what I'm talking about not getting the entry that you would, want. Let's say you see the SMT, you get this explosive move. Now you want to buy in some sort of a discount, right? So if you're measuring from this high to this low, you want to be buying somewhere in here. You can see we never visit that. And that type of speed is why I, took the riskier entry over here, and why I'm trying to look at the sub 1 minute timeframes for entries. Given that you have a narrative as full as what we've just gone over, that's when I'm comfortable doing that type of thing. Because you see, like, other than that, you have to think to yourself, if I know that we're not likely to pull back into the 50%, right, or the equilibrium of this range, am I willing, right, to enter in this gap? Where's your stop, right? Because then you have to think of yourself, well, it's not technically wrong, right, for price to come down here. Like in theory, it can come down here and close in some of these gaps, but if you're entering here, are you willing to take that much heat? And if you aren't willing to take that much heat, are you willing to, say, risk, the CE of this fair value gap, get wicked out, and then chase price again? So this is why I've chosen to move into the smaller time frames when I feel a move like this is more likely. But yeah, so you get that move. It's as soon as ES takes that low, we explode off of the order block and the 50% level of that 15-second order block, and then it's off to the races, really. And then you can see how we react off of the midpoint. Play with it again, play with it again. But that's generally how I like to use these impulse ranges as scalping opportunities. And to be honest with you, this move, right, from here to here is enough. That's 20 points. Or even if it was 15, I believe that's what I took out of it. I think I took like 17 out of it. And you don't need a ton. Basically what this video highlights is a real sensitive point that you have a good idea that price is going to react off of. So I hope that helps. I hope it's informative. And again, everything was a quick top down. We're on the hourly chart, right? We're looking for a impulsive displacement range. It hasn't visited 50%. That becomes a draw. We look for PD arrays that are nested in OTE or around the 50% level, and those provide us our high quality scalps. And it's really just drilling down from one higher time frame impulse range to lower time frame PD arrays and structure, and building that narrative on why should we go up higher. Is there low resistance liquidity resting above? What time is it? If you look, we also get to, I think the move takes place at around the 1040-ish area, actually perfectly at 1050. So had I been a little more time conscious, right, and waited for a 1050 to 1110 macro, that's when the real move sort of happens. It would have kept you out of here. So 1050 is here. You wait, you wait, you wait. We create SMT within that 1050 to 1110 window. We take off. Here's 11.10, and it's off to the races for NQ from there. So, and from that entry, I mean, 86, I believe it went close to 100 points. Yeah, a little bit more. So that's how I use my impulse ranges. Thanks for watching. I hope it's relatively clear and concise. Obviously, anybody could reach out to me on Twitter with any questions, and if they want a more in-depth or polished version, let me know, and I'll see what I can do. Thanks.